Hello, welcome to the market opening bell for Friday, May 30. The U.S. Trade Court ruled that President Trump's reciprocal tariffs exceeded his authority. Hong Kong stocks performed strongly on Thursday, with the Hang Seng Index opening 17 points lower, but later rising, peaking at 23,603 points with a gain of 345 points. It closed up 315 points or 1.4% at 23,573 points. The X-share index rose 115 points or 1.4% to 8,559 points, and the Hang Seng Tech Index climbed 127 points or 2.5% to 5,301 points. Total market turnover was 226.8 billion Hong Kong dollars compared to 180.8 billion Hong Kong dollars the previous day. Southbound funds recorded a net inflow of 4.382 billion Hong Kong dollars into Hong Kong stocks, with net buying Meituan 1.044 billion Hong Kong dollars, Zhong'an Online 756 million, CSPC Pharmaceuticals 365 million, PopMart 178 million. Net selling SMIC 557 million Hong Kong dollars, Xiaomi 529 million, Xpeng 483 million, Alibaba 336 million, Tencent 141 million. Statistics show southbound funds have net sold Alibaba for 8 consecutive days, totaling 5.02 billion Hong Kong dollars, and net bought Meituan for 10 consecutive days, totaling 9.985 billion Hong Kong dollars. Technical analysis: the Hang Seng Index has risen over 4,600 points from its April 9th low of 19,260 points and is currently in the consolidation phase. Consolidation can occur through time or magnitude. If fundamentals remain strong, consolidation is likely to occur over time rather than with significant pullbacks, digesting prior gains. This appears to be the current pattern. Mainland Chinese markets also saw significant gains with increased trading volume. The Shanghai Composite Index closed at 3,363 points, up 24 points or 0.7%. The Shenzhen Component Index closed at 10,127 points, up 124 points or 1.2%. Combined turnover for Shanghai and Shenzhen markets was 1.1853 trillion yuan, up 175.4 billion yuan from the previous day. The renminbi central parity rate fell for the third consecutive day to 7.1907 against the US dollar, down 13 pips, hitting a one-week low. Li Auto Q1 2025 total revenue was 25.93 billion yuan, up over 1% year-on-year, but down over 41% quarter-on-quarter. Vehicle deliveries reached nearly 93,000 units, up 15.5% year-on-year, but down over 41% quarter-on-quarter. Vehicle sales revenue was 24.7 billion yuan, up 1.8% year-on-year, but down 41.4% quarter-on-quarter, with a stable vehicle gross margin of 19.8%. The company attributed the quarter-on-quarter decline in vehicle sales revenue to seasonal factors related to the Chinese New Year holiday, which reduced deliveries. Net profit attributable to shareholders was 650 million yuan, up nearly 10% year-on-year, but down over 81% quarter-on-quarter. Non-GAAP net profit was 1.018 billion yuan, down 20% year-on-year and 75% quarter-on-quarter. The company expects Q2 revenue of 32.5 billion yuan to 33.8 billion yuan, up nearly 3% to 7% year-on-year, with deliveries of 12,300 with 123,000 to 128,000 units, up over 13% to nearly 18% year-on-year. Li Auto's chairman and CEO Li Xiang stated that preparations for the launch of its pure electric SUVs are progressing smoothly, with the Li i8 set for release in July and the Li i6 in September. Anticipation of significant results from pharmaceutical companies, the American Society of Clinical Oncology annual meeting boosted Chinese pharmaceutical stocks. CSPC Pharmaceutical rose 11.7%. Its Q1 2025 revenue was 7.02 billion yuan, down 21.9% year-on-year, missing expectations. The finished drug business saw revenue fall over 27% year-on-year due to policies such as centralized drug procurement and price adjustments in the National Medical Insurance drug list. However, raw material product business revenue grew 14% year-on-year, driven by market demand and price increases. Profit attributable to shareholders was 1.48 billion yuan, down 8.4% year-on-year. The company has nearly 90 products in various clinical trial stages, with 10 submitted for market approval and over 30 key products in registered clinical stages. The U.S. trade court's ruling on Trump's tariffs, combined with strong Nvidia earnings, lifted U.S. stocks, but the Trump administration's decision to appeal the ruling capped gains. The U.S. National Economic Council Director Hassett stated that tariffs remain effective and expressed confidence in overturning the ruling on appeal, noting the government has different options to implement trade policies. He added that three trade agreements are essentially complete and ready for Trump's approval, with more expected in the coming weeks. The Dow Jones Industrial Average closed up 117 points or 0.3% at 42,215 points. The S&P 500 rose 23 points or 0.4% to 5,912 points. The Nasdaq gained 74 points or 0.4% to 19,175 points. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, rose 102 points or 1.4% to 7,226 points. Nvidia rose 3.2% with several major banks raising its target price, benefiting other chip stocks like Broadcom, up 1%. Among the Magnificent Seven, Tesla rose 0.4%, with Elon Musk announcing that the first fully autonomous Model Y vehicles will be delivered next month. Meta and Amazon rose less than 1%, while Apple fell 0.2%. Earnings. Salesforce raised its annual revenue forecast, but fell 3.3%. HP missed Q2 profit and forecast expectations, dropping 8.3%. Futu Holdings saw Q1 profit double, with its stock rising over 7% intraday, but closing down 0.3%. Q1 revenue was 4.695 billion Hong Kong dollars, up 81.1% year-on-year. Non-GAAP net profit was 2.217 billion Hong Kong dollars, up 97.7% year-on-year. On economic data, US Q1 GDP contracted at an annualized rate of 0.2%, an improvement from the initial 0.3% estimate, driven by stronger than expected fixed investment, offsetting a downward revision to consumer spending. Though smaller, the contraction marks the first quarterly GDP decline in 3 years, largely due to a 42.6% surge in imports as businesses and consumers stockpiled goods, anticipating price hikes from Trump's tariff announcements. For the week ending May 24th, U.S. initial jobless claims rose by 14,000 to 240,000, a one-month high, exceeding market expectations of 230,000, signaling a cooling labor market. Tonight, the U.S. will release key economic data, including personal income and personal spending, PC price index, wholesale inventories, and the final University of Michigan Consumer Confidence Index. Our stock pick today is OCUMENSION Therapeutics, stock code 1477. OCUMENSION Therapeutics is an ophthalmic pharmaceutical platform company dedicated to identifying, developing, and commercializing first-in-class or best-in-class ophthalmic therapies. Its core products include Yoshi Ying, Ochin, Emodin, and Salatin. For the year ended December 31st, 2024, The group achieved revenue of 417 million yuan, a significant increase of 69.4% compared to 2023, primarily driven by substantial revenue growth from sales of Yoshi-In, Salatin, and Salicum, as well as synergies from a strategic partnership with Alcon that contributed to revenue growth. The group introduced several Alcon eye drop products, including 7 mature products already commercialized and 1 innovative drug currently in clinical development, bringing incremental business, further enriching the product portfolio, expanding market share, and enhancing market position. The group's innovative drug Serviate for treating allergic conjunctivitis was approved for market launch in September last year. The group held the launch event for Serviate, highlighting its unique dual mechanism of action against allergies and inflammation. The group has actively expanded hospital coverage, accelerating product entry into hospitals, and has achieved coverage of 20,466 hospitals nationwide, including 2,765 tertiary hospitals. Additionally, the group has officially started commercial batch production, with commercial production of 4 products underway in an orderly manner, which will provide high quality, stable, and efficient product supply for the commercialization pipeline. Looking ahead to 2025, the group will increase marketing and promotion efforts for drugs such as Salatin, Salicum, Batoptic, Amidin, and Aesop, consolidating its leadership in niche markets such as uveitis, anti-allergy, and glaucoma treatments, and driving sustained revenue growth. In terms of R&D, the group has established a comprehensive ophthalmic drug product line with 34 drug assets for both anterior and posterior segments, of which 21 products are in the commercialization stage. 3 are in phase 3 clinical trials, and 2 innovative drugs have entered the commercialization registration stage. The group will continue to increase R&D investment in new products this year, ensuring at least 1 NDA approval and maintaining a steady pace of new product launches to periodically enrich the product portfolio and better meet patient and market needs. The Suzhou factory's commercial batch production will be a key focus for the group in 2025 to ensure supply stability and product quality, while optimizing production processes and supply chain management to improve production efficiency and reduce costs. Recommended buy price is 7.2 Hong Kong dollars, with initial target at $8, then $8.5, and stop loss at $6.8. I do not hold the above mentioned stock.